Hi, everyone. My name is Yassine Almandra. I cover crypto and Bitcoin at ARC, and I'm back with another big ideas section, this time about Bitcoin. So Bitcoin has had quite the year in 2021, reaching $1 trillion market capitalization for the first time in its history. And despite the recent sell-off that we've seen this month, we believe the long-term prospects for Bitcoin remain extremely promising, as we'll get into. Last year, some quite notable events. You can see from this chart a few events overlaid by price action. Some kind of worthy of mentioning include Tesla deciding to allocate Bitcoin on its balance sheet, an approval of both a futures ETF in the US and a spot ETF in Canada, suggesting an increased institutional adoption, and the first nation state, El Salvador, accepting Bitcoin as legal tender. Now, especially in times of high market volatility, we like to anchor ourselves to long-term fundamentals. And this year, we released a lot of research on ways to assess Bitcoin's fundamentals by leveraging on-chain data. And these two charts really show how strong holding behavior is and how long-term focused it is. In the first chart in 2021, you can see that while Bitcoin's market capitalization grew by 96%, its realized capitalization, or the aggregate cost basis of Bitcoin, grew by nearly 170%, eclipsing $450 billion. Realized capitalization is a good proxy for its kind of general support levels and cost bases for holders, and higher realized capitalization suggests kind of a higher conviction in the market. Today, while market cap is nearly 50% off its highs, interestingly, realized capitalization is still at all-time highs. In the second chart, Bitcoin's long-term holder base is also strengthening, as we've seen. An estimated 13.5 million Bitcoin is held by long-term holders, and there are more than 500,000 Bitcoin addresses that have received at least 2 incoming transactions and have never spent their funds, which is denoted as an accumulation address. Now, many criticize Bitcoin for not being able to support high transaction throughput, but fail to recognize that Bitcoin supports high economic throughput as a global settlement network for high value transactions. In 2021, Bitcoin settled more than $13 trillion of value, which is more than a quadrupling year over year. $36 billion was settled on Bitcoin's base layer daily, with an average transaction value of $136,000. In our 2019 big ideas, we highlighted how Bitcoin was within an order of magnitude of Visa's transaction volume, and this year it's officially surpassed it. Now, despite the criticism Bitcoin receives for not being able to scale at the base layer, we've seen successful enhancements across the network in 2021. Chief among them is Bitcoin's successful activation of Taproot, which is its biggest base layer protocol upgrade since SegWit in 2017. Along with the introduction of Schnorr signatures, Taproot increases the privacy and efficiency of Bitcoin transactions. The Lightning Network, Bitcoin's second layer payment protocol, has also seen healthy growth, with capacity and channels reaching all-time highs amidst adoption in emerging markets. And of course, last week, Block announced Cash App's integration with the Lightning Network, which should act as a further catalyst. And then finally, we're beginning to see traction of tokenized Bitcoin on Ethereum, which should benefit Bitcoin as a bridge to the Ethereum ecosystem, which adds features and functionality not available on the Bitcoin network. As of the end of November, 1.5% of Bitcoin's circulating supply is wrapped on Ethereum. One of the biggest differences between the 2017 and 2018 market cycle and the one we're currently experiencing is an increase in Bitcoin's institutional holder base. With the approval of more regulated products, with the adoption of Bitcoin by corporations and nation states, today nearly 8% of Bitcoin's supply is held by exchange-traded products, countries, and corporations. Now, this, of course, is a double-edged sword, where institutional adoption might be a sign of Bitcoin maturing, but over-institutionalizing Bitcoin can, of course, lead to concentration of Bitcoin and additional counterparty risk. So it's really important to be aware of that dynamic. But perhaps the most groundbreaking institutional grade Bitcoin adopter was El Salvador, which is the first nation state to deem Bitcoin as legal tender. Adoption there, according to the president's claims on Twitter, has been quite impressive. More people have Bitcoin wallets in El Salvador than traditional bank accounts. And an estimated 3.8 million people use El Salvador's Bitcoin wallet, which suggests an 84% adoption among eligible citizens. And as of October 2021, Chivo was settling $2 million in remittances daily, accounting for roughly 12% of El Salvador's $6 billion in annual remittances and more than 2% of its GDP, really showing how Bitcoin is acting as a remittance network. A prevailing narrative in 2021 that we attempted to debunk was Bitcoin's lack of sustainability. Contrary to popular belief, we believe Bitcoin is quite an ESG-friendly asset with the potential to transform monetary history by providing financial freedom and empowerment in a fair, global, distributed way. So on the environmental side, briefly, Bitcoin incentivizes new and more efficient forms of energy generation. On the social side, Bitcoin offers for the first time ever a system of property rights without reliance on nation states. And finally, on the governance side, and as we've described in the public blockchain section, Bitcoin is open, transparent, auditable, and predictable. Diving into perhaps the most scrutinized part of Bitcoin's claimed lack of sustainability is the E, or environmental concerns, due to its proof of work mining. We believe that proof of work is a necessary component of Bitcoin, where for the first time in human history, provides a way to directly financially incentivize the discovery of cheaper ways to harness energy, independent of location or consumer demand. So Bitcoin mining, which started off as a hobbyist activity, has now evolved into a full-fledged industry, which even nation states today are participating in. And it incentivizes new, more efficient forms of energy generation by offering a bounty, that is Bitcoin, to anyone, anywhere, at any time. In 2021, Bitcoin miners generated nearly $17 billion of revenue. Whereas in the past, generation was only economically viable in locales that were close to the site of consumption, Bitcoin mining allows us to develop power generation infrastructure in remote, energy-rich locations. And this is a boon for renewable energy sources, which have faced scaling and commercialization problems that can now leverage Bitcoin mining and play the arbitrage between electricity prices and Bitcoin prices. And as you can see in the graph, supply almost all grid power demands without lowering profitability. As the best performing asset in the last 10 years, many investors believe they've missed the Bitcoin boat. But if you look at it in the context of other asset classes, Bitcoin still only represents a fraction of global asset values. We believe Bitcoin's market capitalization could increase by more than 25-fold to $28.5 trillion of market value by 2030. And if it were to, it would still only represent a fraction of equities, global money supply, bonds, and real estate. Now, a $28.5 trillion Bitcoin market capitalization translates to more than $1 million per Bitcoin, which we further dimensioned in this slide by highlighting 8 use cases, each contributing to Bitcoin's potential appreciation. The largest use case, as you can see, still remains Bitcoin as a digital store of value competing with gold, but extends to other use cases like acting as a portfolio diversifier in institutional portfolios, an economic global settlement network, a nation-state treasury, or an insurance policy against arbitrary asset seizure. Now, important to note here that Bitcoin's use cases are additive. There's a fixed 21 million Bitcoin supply cap. So for every Bitcoin that's being used as digital gold, it can't be used as a remittance asset or as protection against arbitrary asset seizure. So we're quite excited about the future of Bitcoin. Are very interested in seeing kind of how the long-term holding behavior continues to evolve and look forward to what's in store for 2022. Thank you for tuning in and enjoy the rest of Big Ideas.